Alrighty, time for this week's Dollar Dialogue, and today we are diving deeper into the RBA's decision to hike the cash rate this week by another 0.25% for the second month in a row. Now, you've heard enough from Denise and I talking about this, but now it's time to hear from an actual expert in this space. And so today we're talking to none other than AMP Chief Economist Shane Oliver. G'day, Shane. Great to have you on the Savings.com.au podcast once again.
G'day, Dominic. Thanks for having me back, and hi, Denise.
Hello. Before we start, Shane, I'm going to ask you for your savings tip, quite pertinent in the current climate.
Well, my savings tip is to save frequently and to start as early as you possibly can. In life, that is. I mean, start if you're a little kid, but certainly early on in your working career, because you're going to make the most of those savings if you start early and you get the benefits of compounding.
Can't go wrong with that one. Great tip.
Yeah,
Thank you.
it's a good tip, but you try telling a lot of young people that really want to go off and travel.
Yeah, I know. It's a bit hard to get that across, yeah.
So they'll probably think, plenty of time to be boring and work full time and save money. But
That's right.
Yeah. Getting into all this RBA stuff, Shane, just first up, what was your initial reaction to the decision? Were you surprised? Was it expected?
No, I wasn't surprised at all. The vote was split. It was 5-4 in favour of a hike versus a hold. If I was on the RBA, I probably would have been one of the four arguing for a hold, because coming into this meeting, our view was that the RBA would probably be wise to wait for more information, wait till the May meeting. The war may end, fingers crossed, early. I know Donald Trump keeps telling us it'll soon be over, and then another week goes by. But that could still be the case. He is under immense pressure to try and bring it to some sort of end relatively quickly. And so if they'd waited, they might have that information, in which case the boost to inflation from the war and higher petrol prices could be quickly reversed. And I think it also made sense to wait until the full fallout from the war, if it continues, becomes more apparent. But I also thought, given the way the Reserve Bank looks at it, that their reasoning would have been something along the lines that inflation was already above target. We had capacity constraints in the economy. The war will only add to inflation. All of that combined just risks further pushing up inflation expectations, which in turn leads to higher wage demands and businesses putting on more price rises. And therefore, we thought that they would hike, which they did. But it was also a close call. So they quite clearly had the debate along the lines that I've just gone through there, which is also good. But no great surprises. It was priced in to the money market, 65%, and 22 out of 30 economists surveyed by Bloomberg, including ourselves, expected a hike. So no great surprise.
So if we bring it back to what it means for the punters, and I think I noticed in your report, you said we've had, a couple of rate hikes now to start off 2026. And I think you said about another $86 a month in household petrol budget. So we're looking at $300 a month. That's sort of come pretty quickly. What's that going to mean for households? How do you see that playing out?
Well, it's a fairly painful situation, maybe not as bad as what we had in 22-23 when we saw all those rate hikes at the time. We had 13 rate hikes back then, but that we were coming from a much lower base, near zero. So it is going to be a rougher time for households. I think households have gone from a situation just back in August where the expectation was more rate cuts, to one where there won't be any more rate cuts, to now where we're actually seeing rate hikes. Here we are 6 months later, and when we're into rate hikes and much higher petrol prices. So that is a fairly painful combination for those people with a mortgage and with a petrol car. And I should also point out in Australia that the value of household debt, the dollar value of it, is almost twice the dollar value of household bank deposits. So a lot of people would think, well, there's winners and losers here. If you've got bank deposits, you might win because bank deposit rates will go up. But the reality is that higher interest rates hurt the household sector more than it helps them. The net impact is a negative one. So that will also act to slow down economic growth through time. I guess the other risk is that if we go back just over 2 years ago, when we started to see the rate cuts, I reckon there was a lot of people just hanging in there at that point in time, and the rate cuts provide a lot of relief when they started to come through, and now that's being taken away, and the money market expects more rate hikes ahead. So it is going to cause quite a lot of consternation for people, and over time, I expect this will show up in weaker economic growth.
Shane, it wasn't that long ago. I think you sort of directly or indirectly copped a bit of flack from members of the government. I think it was, maybe the Prime Minister and Chalmers for somewhat suggesting that government spending was playing a part in Australia's inflation troubles and hence resulting in RBA rate hikes. I mean, just looking at what sort of how Chalmers responded to this most recent RBA hike, he pointed out that the announcement didn't mention government spending. Pointed out that while private demand growth in the latest national accounts figures had tripled, annual public demand growth had actually halved. But meanwhile, you've got the opposition leader Angus Taylor pointing out that government spending is now at its highest level outside of recession in 40 years. So what's really happening here? Is the federal government helping to ease inflation pressures, or is it making things worse?
Well, yeah, look, the reality is, as Governor Michelle Bullock said yesterday, aggregate demand is C plus I plus G plus X minus M. C is consumer spending, I is business investment and housing investment, G is government spending, and X minus M is trade. So to ignore the foreign sector and just focus on the first three, you've got the private sector, C and I, and you've got government spending. And the problem is that government spending is running at record levels as a share of the economy. So I think what's happened in Australia is that it rose to record levels. Government spending used to be about 22 to 23% of the economy in the 30 years prior to the pandemic. In current levels, it's around 28%. So it's 5 percentage points bigger as a share of the economy than it used to be, or 5.5%, I guess, depending on where you measure it from. So it's around record highs. I think, to be honest with you, I mean, Angus Taylor may have underestimated. You've really got to go back to World War II to see higher levels of government spending. Federally, you can go back to the mid-'80s and you'll see it, but federal government spending, as in the budget, is a slightly different concept because it also includes transfer payments to households. But whichever way you look at them, they're all at record. They're all at multi-decade highs or record highs. And what happened in the second half of last year was that there was some slowing in public spending growth. So the rate of increase slowed, but it still stayed at a record level of 28% of GDP. But at the same time, private sector spending, C plus I, picked up. And I think what happened was the C plus I picked up, banged into high levels of G, and so aggregate demand in the economy rose. And when demand rises and you don't get much of an increase in supply, guess what happens? The price goes up. The petrol price goes up. A bit like petrol prices in regional Australia. Demand suddenly went up because everyone was trying to fill up their jerry cans. And there wasn't going to be another petrol truck for another week or so. So demand goes up relative to supply, so the price goes up. In some areas they ran out. But that's what happened here. Lack of demand relative to supply. And I think the reality is that government spending played a role in that. Now, if the private sector had remained as weak as it was in the first half of last year, then it probably wouldn't have been a problem. But the issue was record levels of government spending and a modest recovery in the private sector caused us to have the problem. And so I think it's correct to say that G, or government, strong government spending, has been a factor in the higher inflation numbers we've been seeing in Australia.
What's your thoughts on that, Shane? What's some sort of quick hits the government could look at to reduce its spending? Is there some obvious ones that
Well, there are
need
obvious
to be
ones.
looked
The
at?
NDIS has gone out of control now.
Yeah.
Was it 6 out of 10 7-year-old boys? I don't know the precise stat. Someone told me 9 out of 10 boys in Bankstown in the city suburb, NDIS, and you can use it for visits to the cinema and things. It's covering a lot of stuff. We went a decade ago. We had a problem in Australia, and Paul Keating, the then treasurer, appeared on the John Laws show. John Laws was a popular radio. He was almost a shock jock,
Golden
probably not.
tonsils. Yep.
The golden tonsils. He passed away, unfortunately, only recently. But he appeared on the show, and Keating said, "If we don't do something about this problem, we'll be a banana republic." And that ushered in a period of moves to slow down the growth in government spending. In fact, they slowed it for 3 years in a row. In real terms, it fell, and the level of public spending went from, I don't know, a precise number, it was chopped by about 5 percentage points as a share of the economy. So uh, that actually happened, and that's the sort of thing you need to happen here. I think the only difference is this time around we don't have the same level of crisis. But one of the things Keating did, and Hawke and Keating, and then later Howard and Costello, was that they restricted welfare. Like when I was growing up, people would aspire to maybe it was the area I lived in, people aspired to sort of go surfing perpetually and live on the dole. So the term was dole bludger. And I don't think it was fair to say there's a lot of dole bludgers around, but it was a concept. You could go to Nimbin and not have to do anything to show that you're looking for a job, whereas these days you've got to show you're looking for a job. These days, the NDIS to some degree has become part of that. I think the NDIS is a great program, a lot of people getting a lot of great help out of it, but it does seem to have been taken to an extreme. And so I think NDIS is certainly one area to look at, whether we can rein in the growth there dramatically. We also need to look at the growth in the public service. In recent years, I think we've cut back on consultants, but we've expanded the size of the public sector generally. We probably also need to look at middle class welfare. By that I mean, being able to get welfare even though you're quite well off. Make sure that welfare is more targeted than it currently is. So there's a bunch of things that can be done here, and that has been done in the past. Hawke and Keating did the same thing back in the mid '80s, and I think it's necessary. You got to reduce the size of the government to make room for the private sector to pick up. For businesses to invest more, for home builders and households to build more houses and so on.
Yeah, no, it's just, I mean, obviously there's a May budget coming up soon, so I wonder if we're going to see some action there. Just a few months to go, and then so perhaps there will be some tough decisions to be made by this government. We're pretty much out of time, Shane, but I just wanted to squeeze one more big one in just before you go. Is Australia now headed for a recession?
Well, I hope not. But we're back to the governor didn't use the narrow path the other day, but could have. That's a risk. We're raising interest rates again. We get a hit there, and households get a hit from higher petrol prices. So that's a double whammy or a triple whammy if you include the hike in February, and that's going to be a dampener on things. Businesses will be less confident. Households will be less confident. The history of oil shocks in the 70s. Was that we did go into recession. And in fact, in the US, there's been a long history of surges in the oil price. Once it doubles, we haven't quite got that level. Although we did briefly Monday week ago, it got to 118, I think 119 a barrel. If that happens, then yes, there is a high risk we could go into recession. I guess we're not as dependent on oil as we used to be. The oil intensity of GDP has declined as cars have become more fuel efficient, as we've electrified to some degree, as we've had an expansion in the services sector. So that lowers the risk a little bit, but that risk is certainly there. And the longer the Strait of Hormuz in the Middle East remains blocked to oil supplies, then the bigger that risk will get. So it's not my bottom line is it's not my base case, but it's certainly a risk to watch out for.
That's interesting. It seems like there's a certain orange character that may have not have thought of all of the implications.
No, I don't think he did. He didn't. Well, his team of yes men didn't. I mean, he came out the other day. Yeah, the oil price did go into panic 1 week into the crisis, got to $118 a barrel. Then he seemed to come out with a panic and say it's all going to be over very soon.
Yeah.
And the oil price had come crashing down. It's almost as if they didn't anticipate that Iran would block the Strait of Hormuz. But I think anyone who's looked at it would said, well, if Iran is threatened and the regime's survivability becomes an issue, that they would do that. In fact, I had charts from last year's issue with Iran and the US and Israel to that point in my presentations I was using last year, which I've just resurrected again. But they're actually doing it. So it seemed to me like one of those things that Blind Freddy could have told you would happen. And now, of course, there's an attempt to get other countries involved in fixing up the problem. And some of those other countries kind of think, well, you got us into this. You've
Good
got to try
luck.
and good
Yeah.
luck. And the diplomacy is the only way to solve it, not lobbing more missiles around. Anyway.
Yeah. No, that's great. Thanks so much for joining us, Shane. It's always great to have you on the podcast with your views, and very interesting times, as you say, a lot of variables in there. I see you don't have
Certainly.
a base case of another rise in May, but of course there's too many factors that could throw that either way.
That's right. That's right. It's a messy situation, but hopefully next time I'm on the podcast, it will have resolved itself. Hopefully.
That's what we're all hoping.
Yes, well, yes, we always appreciate your objective, level-headed, measured insights, Shane. So, yeah, thanks so much for your time. Very generous with your time today on Savings.com.au podcast.
Thanks, Dominic. Thanks, Denise.
Thanks so much, Shane. Great to have you.